Hey, what's going on, everybody? Today we're talking ARK Fintech Innovation, ticker symbol ARKF. As a disclaimer, this is not investment advice. This is just a research video I put together meant to be educational as well as entertaining. I have a small position with this ETF. I'm going to highlight some of the fundamentals regarding this ETF, showcase some of its holdings and allocations, drop you into a news article regarding one of its bigger holdings, and we're going to take a look at the stock, price action, some of the technicals regarding the share price. So I hope you enjoy. Please like, share, and subscribe.
The financial services industry is ripe for innovation. While we have seen advances such as ATMs in the 60s, debit cards in the 70s, and online banking in the late 90s, financial services have yet to experience a fundamental transformation. In fact, in today's increasingly digital world, financial services, one of the largest markets of the economy, remains mostly offline. Enter Fintech. Fintech refers to the innovative technologies making financial services more efficient, personal, and secure. Here's what's advancing Fintech forward. Mobile technology. It not only connects our world and offers easy payments on the go, but it has the power to provide almost 3 billion unbanked people affordable access to financial services, helping to overcome poverty, reduce income disparity, and increase economic growth. Big data. The rise of mobile devices has led to a massive increase in data, allowing companies to better understand and assess their customers' needs and offer completely new and personalized services. Machine learning. Machine learning algorithms allow companies to transform big data, this raw information, into instant risk assessments, decisions, and product customizations. And blockchain. Just like the internet distributed information and made it widely accessible, blockchain technology is doing the same for value. It manages and secures trades, ownership, and trust while eliminating the middlemen. So how will Fintech affect your life? Well, say you want to start a business. You can now obtain a business loan without getting out of bed. Through blockchain technology, your business idea can be managed using smart contracts, making agreements, distributions, partnerships, and production processes easier, more reliable, and secure. Once your business is up and running, a simple scan of an eye or fingerprint will authenticate mobile payments in your store and from customers around the globe. After each purchase, the data you receive will be analyzed to help grow your business further. And when not at work but out with friends, splitting the bill becomes easy and payment fun. Finally, after a long day, you can effortlessly check your investment portfolio and automated retirement accounts, ensuring that you meet your financial goals. The financial transformation is here. Fintech puts people in control of their lives, empowers them to make better financial decisions, and fosters economic growth.
Well, now that we see how this vehicle operates and its functionality, I think it's important to hear from Kathy Wood, the active manager for ARK Invest.
10 years. You can see other technologies evolving with them. And you can see the one specific to Fintech, which is what this conference is mostly about. So you can see mobile value transfer devices, artificial intelligence in the cloud, and blockchain technology. So 2 of the big 5 are at work in the Fintech space. So you can see that modern financial industry evolved over roughly 1,000 years. So in the 1100s, we had the first foreign exchange contract. In the 1600s, the first stock exchange. Not until Amazon did its one-click payment system did the modern age, we think, start to take off. So that was in 1999. And then you had PayPal's email payment system, and then you had Alipay's app payment system, and you see the explosion in China's mobile payment volume. So in 2017, when I first saw the number 9 trillion, it was 8.6 trillion, that China was reporting for its mobile payment volume. I just didn't believe it. I didn't believe it because its economy was $11 trillion, and the consumer was 35–40% of that. And so I was thinking very narrowly and incorrectly, and shame on me because I have an economics background. What we're seeing here, look at this, $1 trillion in 2014 in China's mobile payments to $26 trillion. That's only 4 years. That was 2018. Talk about exponential growth. It's 2 times their economy, and China accounts for more than 90% of all mobile payments globally. They have run with this, and if you go into China, into tier 3, tier 4 cities, you will see merchants in huts using only WeChat Pay. They don't want cash. They're afraid of counterfeit cash. And these are 70 and 80-year-olds. You do not see that certainly not in the United States and the developed world.
It's always good to see and hear Cathie Wood's passion. You see her enthusiasm for fintech. Since this ETF is actively managed, it's just something that I pay attention to and I can definitely appreciate. So let's take a quick look at all of their holdings. Let's take even a deeper look at its number 1 holding, which is Square. This stock has been on fire, especially with everything going on lately. We see here that its weight percentage is 12.48. It's the only holding that is above 10%. So let's take a quick look at Square and try to understand why this ETF is allocating the highest percentage to it.
Out of us, and we'd have to point them somewhere else. We want to make sure that they see us all the way along the path. And as they go from 10 locations to 20 locations, or from a coffee cart to the size of a Starbucks, we can handle both extremes.
Square started to realize it had the ability to compete in the larger payment processing business, creating an ecosystem of hardware and software products businesses could pay extra to take advantage of. There was Square Stand, which could replace a register, a suite of software products to help manage things like payroll, and even small business loans. Building off that momentum, Dorsey took the company public in 2015.
An important day for tech as Square, the mobile payments company, goes public at the big board. CEO Jack Dorsey is due to ring the NYSE opening bell, but ringing the opening bell with his mother, Marcia Dorsey. Not a bad Twitter follow in her own right.
3.7 million shares of Square open at $11.20. That's a very good price.
I mean, it's all about getting the business and accelerating the business, and that's what we came here to do today, and we did it.
But after the billion-dollar company went public, its share price started faltering, dipping below its IPO price 3 times in less than a year. Analysts began questioning whether Dorsey could run 2 major companies.
It requires a full-time CEO.
I know Jack's being stretched and pulled in different directions with these 2 firms.
Jack's an incredible product thinker, an incredible person, but I think it's hard to see both companies going through the cultural change as public companies while his time is split.
New trendy payments companies like Toast and Clover started pushing into Square's core market. Then, Square reported worse than expected losses.
I read a lot of analysts' notes who think they just have no path to profitability, like ever.
But Jesse says Square has always been able to offer something its competitors struggle to replicate.
What's really powerful about building an ecosystem top to bottom, the hardware, the software that runs on the hardware, the iOS and Android apps, and all the back-end systems, is that you can really observe how they all work together. Our competitors in this space are much more siloed.
And in retrospect, the stock did rebound. A big part of that rebound came from growth in a part of Square's business a lot of people don't even know exists, Square Capital. While Square is not a bank, it partners with financial institutions to offer loans to many of its small business sellers. Jackie Reeses, head of Square Capital, sat down with us to explain how a payments processor got into the loans business.
We started lending years ago after listening to our sellers talk about their biggest pain points.
What Square says they discovered is that a ton of these sellers just couldn't get access to capital from traditional banks.
Our biggest competition is competing with friends and family. It's not going to a bank because banks don't even come close to offering loan sizes that are in the scale that we offer at Square Capital.
That helps me understand why this ETF wants to allocate the highest percentage to this company. I can appreciate and I like the company. Let's take a quick comparison side by side of Square and ArkF, and we just see the performance of Square versus ArkF. Since the biggest allocation is in Square, we see that the price action moves similarly. It's not exactly the same. There's a little bit of a crossover with performance, but Square outperforms it, of course. But let's take a look at that share price, 141 to 37. And since ArkF has other holdings in it, it's going to be a little bit more reactive regarding some of its other holdings. This helps me dictate how much I would like to allocate into an ETF versus a single stock. When I take a closer look at its top 10 holdings and what Fintech is all about, you know, Zillow is in there. People want to buy a house, you can do it online. You know, Apple Pay is there, Mercado Libre is there. Let's take a closer look at Tencent. With some of the more recent news going on involving this company and the stock, I think it's important to understand where this ETF can go based on its percentage allocated to a company that's been in the news lately. And it's been in the news because it's being threatened to be banned from in the US, its WeChat app. So I'm going to drop you into a news article.
The Trump administration's ban then of WeChat, how damaging could it potentially be for the revenue stream?
Yeah, this doesn't seem to be. Sri, thanks for having me on the show here. You know, based on management's comment on the call, specifically, you talk about revenue being 2%. In terms of looking at total user base, maybe several million at the very most of 1.2 billion. It's a pretty small base. And if you think about monetization, that would be even smaller because most of the U.S. users do not have a Chinese bank account to connect to WeChat to do transactions there. And it's very interesting that, you know, management emphasized on the call that WeChat and Weixin, they are two separate systems there, where the former is utilized by international users, where the latter is for Chinese domestic users there. And they're currently waiting for instruction from the U.S. specifically, but they did not provide a lot of details. But obviously, you know, as an investor, many would speculate if the U.S. government decide to take additional action outside of WeChat, for example, gaming, where Tencent does have equity stake in Epic Games and Riot Games, I think the impact would be a little bit greater, and obviously it's too early to know at this point.
But despite all that, you've got a neutral rating on Tencent, I know. Price target 12 months out, $550 compared to $520 now, which means you still see roughly 6-7% upside, right?
Yeah, that's right. Yeah. A couple of different reasons. We're kind of staying on the sideline right now, Martin. First, on valuation. I think Tencent right now is trading at a premium, for example, to Alibaba, trading at mid-teens, FY22 EBITDA, while Baba is trading at a little bit discount there. And secondly, the regulation of games in China in terms of approval process is still pretty strict for a lot of international games. For example, you know, big titles like Fortnite, like Riot Studio games, they still have not approved by the Chinese government at this point in time. And lastly, recently from our channel check, we heard that ByteDance wanted to get into gaming in a very meaningful way. So there could be some emerging competition in the gaming space, and that's why we're looking at those factors very carefully, and for the meantime, we'll stay at neutral.
So it's important to understand what you're buying. For myself, I like to listen to the news. I listen to at least 12 different podcasts. I'm a little bit neurotic when it comes to the finance podcasts and stock market podcasts. So I'm just trying to keep my ear to the ground, understand what's going on with this vehicle. We're going to take you into my 1 month trading view of this ETF, ArkF. I'm going to highlight a level of resistance here in the high 30s, low 40s, like $40 would be its current level of resistance for me. Going to highlight some levels of support from late July, mid-July, all the way to where we're currently at. It's August 15th, 16th, I'm making this video. And we see here that past levels of resistance have become new levels of support. I was taught this as far as looking at technical analysis, where I can try to get some value in the price action. So I'm highlighting that coming up here, where this level that I'm going to highlight in, I guess, let me see, yeah, I'll do yellow right here. That at one point was a level of resistance. It broke through that. It came back down to become a level of support. So this is showing me some stair-stepping pattern of ascension. It hits the resistance levels a couple times. It comes back down to where we're currently at. But I think if we can get past this current level of resistance, then perhaps we can make that a new level of support, and then proceed and continue on with the growth level and hopefully some ascension with this ETF. I like this ETF long term. I like the price. I like the fintech space. So I really am excited about this company. I like the ETF, again, like I said. So we'll see what happens with everything in the news. So I think I'm going to leave it here. I appreciate your time. Please like, share, and subscribe. I really do appreciate it. It helps out the channel a lot. If there's another company or an ETF that you would like to see me research, please drop it in the comments. I really appreciate it. Well, y'all have a good weekend, and I'll see y'all in the next one.